Hey traders, it's Danielle. Welcome to this week's edition of Simpler Playbook. So, not a whole lot has happened directionally in this market this week. For me as a directional trader, it tends to be a little bit boring when we're not getting too much movement. But like we talked about in the video last week, when we saw the breach of 2,900 to the upside in the S&P, what happened was the market got a little bit stagnant and we had a very low put-call ratio. Now, the same situation for this week still applies. Why? Well, the put-call ratio just kept getting lower. What does that mean? It means that people are loaded up on long calls to the upside. When people are loaded up on long calls, that generally means there's not that much room for the market to explode to the upside, because for that explosion, we need people to come in and buy to push the prices higher. So, number one, still have a low put-call ratio. Number two, we've remained in a pretty tight, stagnant range. Now, what I was hoping for last week was that we would get more of a sell-off Monday, Tuesday, even Wednesday. That would get people out of their longs. It would get people to start loading on short. And then after the fall, we could really get in for the run into earnings. Now, of course, we can always wish for things in the market. That doesn't mean they're going to happen. So this week, honestly, we really didn't get too much of a fall. We got a little bit of volatility, but nothing crazy, nothing big pullback like. So what does that mean? Well, first of all, the indexes were able to, edge out slowly some higher highs. The NASDAQ was actually able to make a new high on the year. So you have the QQQs and the NDX that made that new high. So yay, new high there. That means usually the S&P and the Dow are going to be close behind. However, this is a very, very interesting situation because the place that we're in right now is we're right before earnings. Netflix has already reported. It fell slightly on the report. Well, when I say slightly, I mean it fell about $50 in the overnight session, but immediately it was bought up and snapped back up. And then the day after the report, it was a little bit slow and silent. So, what does that say? Well, first of all, it says that Netflix is very strong. Netflix still has that daily squeeze. No, it did not explode to the upside, but you know what? Now that earnings is over and it didn't completely die, number one, the NASDAQ was able to make new highs. And number two, that gives a little bit of confidence for the rest of the FANGs that are reporting next week. So what do we do here? Well, looking at Netflix, I actually think the slight pullback on earnings is a great buy point. It's honestly one of the only stocks that I'm looking at to get in right now. Why don't I want to get in anything? Well, the situation that I described in which I was looking for a market pullback to get in the run into earnings, it never happened. So we're in a spot right now where if you want to buy anything, you're literally coming in and buying the highs. That is not something that we want to do, especially when you're new. So for this week, I'm primarily taking off most of the rest of my trades. I took off Nike as it went to new all-time highs, took off my trades on Amazon. I have one left on PANW, but for the most part, I'm really trying to lighten up. Next week is going to be all about earnings. We have Amazon, we have Microsoft, we have Google, we have Facebook, all coming out next week, along with tons of others. So really, the only thing that I'm going to be focused on next week is going to be short-term day trades for run into earnings. And then also I'm going to trade the actual reports and I'm going to make some after earnings trades. So that's going to be my entire focus. As far as swing trades go, honestly, the only one that I see here is Netflix because of that pullback on earnings, because it still has that daily squeeze. I'm looking to start coming in and building a swing position in Netflix. So for those of you who are viewing on YouTube, I'm going to go ahead and switch over to the chart segments for my foundation members. If you want to get that segment, make sure you sign up for foundation. And for my foundation members, I'm going to go ahead and switch over to the chart segment now, and we'll go in detail into all the levels that I'm looking at for next week.